All right. We are here. We're ready to get started. Just putting this last thing on here. How you doing this morning, Danny?
I am doing well. How are you guys?
Awesome. We are doing great. Let me just launch this thing on Facebook real quick here.
Will you give me a sound check? I'm going to mute my speaker so there's no extra echo, and just give me a thumbs up if that sounds pretty good. Does that sound good? Okay. Check, check, check.
Sounds great. All right. And we are streaming now live. I have my record button pressed, so we're all set there. Danny, I'm looking forward to this keynote. I have no clue what you're going to be presenting on, but I know it's going to be good. So it's really going to be awesome. I'm going to do a quick introduction of you, Danny, and I'm going to turn it over to you. I'll turn my microphone and my camera off, but I'll be in the back end if for some reason there's any issues or anything like that. So first off, Danny has acquired his first rental property in 2013. And from the initial profitable experience with real estate, he became obsessed with building a multi-million-dollar portfolio that generates double-digit returns. He has completed 11 projects with over $8 million in assets under management, which actually there's more now, I believe, which you could probably cover some of that if you wanted to. He's now the key principal and partner with our group, PassiveInvesting.com, focusing on finance. So, Danny, without further ado, I'm going to turn it over to you and let you take it away.
That sounds great, Dan. Thank you. And if you need me, I'm going to be muting my speakers. So just jump in visually for me and give me a hand signal so I can unmute you guys.
Sounds good.
Well, good morning, Multifamily Investor Nation. I am very excited to be here and be a part of this. I think it's been a great couple of days. And I am going to jump right in and get started. I see we've got several participants here in the Zoom meeting and probably several more on the Facebook Live. I'm a true believer in the early bird gets the worm. So I'm going to get things started a little bit differently, I think, than what we have been used to over the last couple of days. But we are going to give away a free ticket here to the Multifamily Investor Nation, the next MFIN Summit coming up, and we need you to follow a few directions. But before we do that, what I want everyone to do with me this morning, if you are sitting down, please stand up wherever you're at, and get ready to get a little bit loud. Like I said, we're going to do something a little bit different. We're taking a play out of a very famous entrepreneur's playbook, and I want you to follow along with me and say this out loud. We're going to do something called the hog call Razorback chant, and we're going to say woo pig suey, and we're going to say that 3 times really loud. We're going to get ourselves excited here this morning. So follow along with me. Woo pig suey, woo pig suey, woo pig suey. All right, great. And so without further ado, I'm going to jump into how we can get this free ticket to the next event. And we are going to, here's what I want you guys to do. I want you guys to go to your Facebook page, post, I'm going to the next www.nextmfin.com summit. Take a screenshot of that and send an email with that screenshot to Stacy at multifamilyinvestornation.com. And in the subject line, this is really important, in your subject line, put the name of the well-known business entrepreneur that was infamously known for doing the hog call at his company's 7:30 a.m. meeting on Saturday. And they ran this meeting for many, many years, every single Saturday. And there's none of you out there listening today that were better at business than this person. And I think you'll be pleasantly surprised once you figure out who this person is. The first correct answer that Stacy receives the email from with the correct name and the subject line is going to get a free ticket to the next MFIN.com summit. So thank you for participating in that. Get your email into Stacy, get your post, get your screenshot. Let's get it done. I look forward to seeing you guys at the next summit. And I'm going to be telling you the answer to this question coming up in my presentation. So the agenda for today, I'm just going to go through this really quick, and then I will stop sharing my screen. But the agenda for today, I'm going to just go through a little bit more, as Dan shared with you, about my experience and who we are. And really, when I'm talking about we, I got started with my wife in this, and she's been an instrumental piece to the equation for us to have the success and where we are today. So I'm going to go through who we are and what we do. Then I want to talk about shattering some limiting beliefs and social constructs. And then I want to talk about building your expanders, having flexibility, and then I'll share a little bit about our vision. And I think we've got the next speaker coming up at 9:30. So I'm planning to go for about 45 minutes, and then we'll just open it up to Q&A and kind of take things from there. So without further ado, Dan, thank you for the intro, and thank you for putting this great event on for us. I am Danny Randazzo, and my wife, Caitlin, that's who we are. And as Dan said, we got started in 2013. We had a rental property, and what is really important is the build-up before that event actually happened in buying that first property. And so a little bit about my background. I grew up in Michigan, just your typical middle-class family. My grandparents all believed that people should go to college, get good grades, and get good jobs. And so, all of my aunts and uncles and my parents went to college, did okay, and got a good job, and have worked in the typical 9-to-5 routine. And so, when I was growing up in Michigan, I really appreciated the lessons of, working hard and just being a good, honest person. And so when I always remember growing up around my friend circle, I was just a little bit different than the rest of my friends. And I always felt that there was a kind of edge to me or advantage to me about just this work ethic that I had burning inside me. And I would always, the excitement for me, I remember I would run a coffee and donut stand during our subdivision garage sale, and I would just crush it in sales. I would sell more coffee and donuts in terms of revenue than the rest of my family combined with their sale. And so the first year I started with coffee and donuts, and then I expanded to have hot dogs, chips, soda. Coffee and donuts always sold really well, but I was expanding my inventory to push revenues, and just loved it, and was excited to talk to people and, meet people as they came by our house to see what was at our garage sale. And they just loved the food and beverage stand and sales that I had there. The other thing that kind of always led me to believe that I was a little bit different than my friends group is when I was in middle school and high school. I always hustled hard around the neighborhood to sell things or work hard and have money in my pocket to be able to spend it on things or save it or, go on little trips here and there. Because again, I just kind of grew up, basic middle class. My parents definitely provided the basics and essentials, but if there was anything above and beyond that, I was taught to work hard and earn your money, and you can go ahead and spend it. And so the other thing is I would wake up on the weekends and I would mow probably 3 or 4 lawns before my friends were even up and moving. And so I'd be out there at 7:30, 8 o'clock in the morning, mowing 2 or 3, 4 lawns in a day for like the first 4 hours. And then I would hang out with my friends at noon once they were up and moving. And by that time I had put 4 hours of work in already. So, as far as who we are, I personally, I'm a little bit different than the average person. And I think you all are very similar to me, where we're just a little bit different than, the average people out there in the world. And we've got a passion for real estate. We've got a passion for working hard. And we all have an appreciation for what it takes to earn a dollar. As a real estate syndicator today, I've got a great appreciation for every single dollar that people invest with us and trust us with, because I've worked hard to earn dollars, and I know the hard work that it takes to make it. And so, once you have it, you absolutely need to do everything you can to protect it and ensure that that investment is there. The other component to the we, and this is really important, my wife, she was always a little bit different than the rest. And she never believed in the traditional 9-to-5 job. She's always had her own business and kind of done her own thing, which gave her, and was something that really attracted me to her, that she was a little bit different and wasn't bought into the whole 9-to-5, have a 401k type of lifestyle. And, just be out there, be a mover and a shaker, believe in yourself, and put in the hard work to get what you want to achieve. And that was really important to me, and a key team member as we started to grow together. The other really important piece to who we are and what we do was bridging the gap with my wife in terms of investing in real estate. So I said she owned her own business, never believed in the norm, but one thing that we had to overcome at the beginning was educating her about real estate and the powers that it can bring to your lifestyle. And so rather than me trying to educate her or even think about telling her what to do, I took a different approach. And here's a tip for you all out there. If your spouse or significant other or someone you think you might be partnering with in real estate is new, I would suggest you have them listen to a few podcasts. And so what I did with my wife is I actually cherry picked a few really good Bigger Pockets podcasts that had strong females on the show. And so she could listen to them and their story and start to build in her own mind what real estate can do. And then we started having conversations about it. And once I got her hooked on a couple of podcasts, her brain really just took off with it, and compiling her business experience with the possibilities of real estate, we were off to the races, and we were aligned, and really a really strong we and vision that we had. And so what did we do? We sold everything that we had in California, moved across the country to Charleston, South Carolina, where we are today, and started building our real estate portfolio in Charleston. And we didn't really know exactly what we were going to do. We kind of came out with the mindset of investing in multifamily, and getting started was something that we kind of struggled with. We didn't exactly know what to do. We just knew real estate was the answer, and that's what we really wanted to do. And so we started to set some goals and identify what types of criteria we were looking for. And that really helped guide us to making some of our very first initial investments, in which we started buying commercial properties first. And then we did a variety of different on-market, off-market foreclosures, short sales, short-term Airbnb rentals, and then moved into large-scale multifamily. And so we'll get into a little bit more about the multifamily vision, but I hope that gives you a little bit of background about who we are and what we do. Today, we're, apartment syndicators, and work with, great people like Dan and Brandon to develop our business and where we're at. So that really kind of takes care of who we are, what we do. If you guys have questions, post them in the forums, in the Q&A box, and then Dan will help us get through those towards the end of the session. Second item on our agenda is shattering limiting beliefs and social constructs. So this one was really big for me, not as big for Caitlin, because she had kind of shattered the limiting beliefs coming right out of high school and doing her own thing, being in her own business, and really getting around that. And so for me, shattering limiting beliefs, I remember when I was growing up, and I always heard people around me saying that I should get good grades, get a good job, and go to a good college so I can get a good job. I'm just trying to get my notes moved over here so I can see everything that's going on. Bear with me for just 1 second. So where was I? Shattering limiting beliefs and social constructs about getting a good job, getting good grades. And I remember, very specific times throughout my life where my grandparents or my parents or aunts and uncles would say, you just need to get a good job and have a 401k and work for the next 30 or 50 years, and then retire and then enjoy yourself. And I was like, this is freaking crazy. There is no way I'm buying into that. And so from little on, I always read books like Rich Dad, Poor Dad. I read that book in middle school. I revisited it in high school. And again, I was a little bit different. I worked hard. I was a little entrepreneur when I was in my teens and throughout middle school and high school. And so I never quite bought into that limiting belief of like, you have to have a corporate job and the backing of a W-2 income to get where you want to go. And I think it's crazy that people buy into that construct as opposed to believing in themselves and really driving or steering their own ship or their own vision. Another limiting belief that I remember from growing up that I had to get myself away from was some things that were talked about in my household. And that was always around money issues, or money was kind of this taboo thing that wasn't really talked about. We didn't know, how much money was made, how much was spent, your basic income and expenses, which is really important to understand. And so I remember specifically growing up and hearing, Danny, money doesn't grow on trees. And so in the background here, I've actually got my money tree set up. And I'm going to give you a backstory about what this money tree is and the seeds that it took to plant this tree. And it's a figurative tree, but it's really important to me because I look at this tree every day and I know the hard work that I put in to get to where it is today. And so let me tell you the backstory about this money tree. When I graduated from college, I had a degree in finance. And again, my, belief was get a good job and work for a big company and you're going to be set for life. So I started working for a large consulting firm doing business, finance, and economic consulting for some of the largest Fortune 500, Fortune 100 companies in the world. These are multi-billion-dollar organizations. And here I am going into meetings with the C-suite and, high-ranking finance people talking about their P&Ls, their income and expenses, how we can optimize their business process to increase financial performance, profit margin, ultimately improving their business. And this taught me a great deal and allowed me to build the strong foundation or root system to where I am today. So the skills that I've acquired through this consulting experience and working with Fortune 500 companies and their financial performance gave me the ability to look at multifamily deals, evaluate opportunities, know the ins and outs of income, expenses, looking at someone's profit and loss statement, looking at their balance sheet, checking out a general ledger of transactions. Critically important information to be successful in any sort of real estate business or any business at all. You need to know your numbers. And if any one of you out there have watched Shark Tank, people get chewed alive going into the tank, not knowing their numbers. So I have always had a passion for knowing the numbers. And for me, coming out, having that corporate job experience was absolutely instrumental. I wouldn't change it. I wouldn't go back and say, I'm not going to do that, because it allowed me to build such a strong root system and foundation for my money tree that it was very important to the success that I have today, being able to know the numbers, know the income, know the expenses. How can we optimize financial performance for us and our investors that invest with us? Because it's important to hit our numbers on a weekly, monthly, and annual basis to ensure that we're successful. So the money tree started with the seeds of that background, growing up, having an understanding of finance, getting the corporate experience, the actual in the weeds experience of how finance and how economics really work and how they're applied to business. And so that experience allowed me to start investing in real estate and do it proficiently right out of the gate. I said we initially bought a commercial property from day one. We didn't start with a single family. We didn't move up to 2 units. We just started out, boom, commercial. We're going to go big. We're going to do this thing. And we bought that first property with all of our own money. And the reason that we did that is we knew we had to prove the concept and say, hey, we are truly real estate investors. We've got our own money out here in this deal. And then after we did that, we started to bring some investors in on a very small scale to the next deal, in which we invested a lot of money in as well. So how that equates to the money tree: having assets that work for you and produce passive streams of income. And I'm going to say passive, right? Assets that just generate income streams for you, whether they're passive or active. I am always going to have some sort of active role in where my money is. That's just the nature of who I am. It's never going to be passive where I never look at it or check in on it. I am always going to have some level of activeness with my investment. But what these investments have allowed us to do for my wife and I is to travel. And so my money tree is made up of currency from all sorts of countries that we've been to. And I recently wrote a blog post about it. You can go to randazzocapital.com and just check out the blog about the money tree and the details behind it. I won't go into those details, but the foundation of education, real world experience, and assets that generate income allowed us to have our own money tree. And so I look at this every day and kind of think to myself, Danny, money doesn't grow on trees. Well, I made my own, so yes, it does. Another big topic around limiting or shattering limiting beliefs and social constructs is what people's perception or opinions are. I think there's people who are very opinionated and sometimes have no value or experience to have that opinion. And so I try to block those people out quite a bit. If they have never done real estate before, why would I be taking advice from them? And so what I would say is, from a social constructs perspective, it's okay to put people off to the side and maybe not let them infiltrate your brain with negativity or opinions when they have no experience about it. We had a great panel discussion yesterday, the roundtable, about the outlook for 2019. And each of those panelists in there have extensive real estate experience. And so I greatly appreciated all of their varying opinions about what the market is going to do. And I even took some very good takeaways to what we can do for our business as we look to 2019. And we really don't know what's going to happen, but taking the opinions of people who have no experience is something that I've always kind of blocked out. From a social constructs perspective, they're over here, and I'm not going to let them infiltrate my brain with negativity. Another thing that I remember growing up was a comment that was made to me that said, Danny, your perception is not your reality. And I think about that. I can actually visualize myself in that seat, where I was sitting, what was around me, and when it was said. I think even I remember the time of day. It was around 4:30 because the sun was beaming and hitting me in the face right here, and that burned into my brain. And I felt like saying, you are dead wrong. I didn't. I was cool, calm, and collected and just kind of nodded my head. But in my heart and in my gut, that stays with me every day. My perception is my reality. What I believe I'm going to do and what I think is exactly what reality is to me. And so even though it may not be happening in front of me right this very second, I know I'm going to get there. So from a social constructs perspective, it's okay to be a little bit different. And when I say my perception is my reality, that's what I believe in. And so I would say, take that and apply it to your vision and really what you believe in, but just understand it's okay to be different. Do not follow any sort of social constructs out there where you need to abide by society, or don't buy into any limiting beliefs. Get your own experience, develop your own opinion, and really do your own thing. Which takes me to the next point about really doing our own thing. I've always been a person of kind of self-exploration and self-discipline. And so you can see on our wall back here, we've got a bunch of books that we read. And these are ways that I explore and figure out new types of approaches that I can apply to business, to life, to the success of my key relationships, and really become a better human being on a regular basis. And so in order to go beyond any limiting beliefs or social constructs, you need to be disciplined and you need to have self-exploration. And we all have that, right? We're here on a Saturday morning at this great event, listening about real estate and looking to learn and develop and grow and expand our business for the years and years ahead. A critical piece and kind of our next main topic, now that we've shattered our limiting beliefs and social constructs, what else can we do aside from just reading a bunch of books to grow? And this one is really important to me. It's having and growing your expanders. And what I mean by expanders are people around you, dead or alive, that influence your ability to grow and bringing in new and important perspective to your business, to your life, to your relationships. So the first expander that I think is the most important to you is your partner in life. And so for me, my wife is the biggest expander that I have. She brings in a totally different perspective to our relationship and our business than I do. And I greatly appreciate that. And I think having someone close to you that can be on the same page and be your number one fan, your number one partner, is the best thing that you can do. And so go out and get that done and make sure, sometimes you may not be as aligned with your partner, but I would suggest if they are apprehensive about real estate, try to get them listening to podcasts and have them do some self-education around it so they can become on board and aligned with you. Other key expanders, and I think about this critically every day, are the 5 people that you talk to, hear from, or see the most on a regular basis. This is absolutely important. And for me, I don't think about it of who I see on a regular basis, but it's who I talk to on the phone. Who do I give ideas to and talk to, and how do we grow? So 5 people close to me: my wife, I've got my business partner, Dan, my business partner, Brandon, and a couple other key individuals who I talk to on a regular basis. I may not see them day to day, but those people are close to me. And guess what? I'm not talking politics with them. I'm not talking about what's happening in the news. I'm talking about real estate. I'm talking about business, and I'm talking about life in general. And yeah, we talk about money. We talk about taboo things that aren't the normal social construct because it's things that we care about. And ultimately, we want to better ourselves, and we can do it with more people. The other key to expanders outside of your partner or the 5 people close to you is having idols. And I think about these idols as my army of people who support me in my corner. If I'm going out in a boxing fight, who's the people in my corner that are going to back me and support me and push me forward to do my best? And so for me, I have idols, expanders, an army of people that bring support to me, dead and alive. I've got people like Thomas Edison, who I read about and know how his story is, and he's supported me along the way. I've got people like Sam Walton. And Sam Walton, to answer the question from the very beginning, is the famous business person who would do the Razorback hog call at his daily 7:30 a.m. meeting on Saturday with his team. When they were first starting out and they had just a couple of Walmart stores, they had a regular occurring Saturday meeting. This meeting occurred through their sales achieving more than $1 billion in revenue. Very excellent expander for me. I highly recommend getting his book to apply to your business, and you're going to learn about some frugality that he has. You're also going to learn about the insane work ethic that he has, and it'll help put your work ethic into perspective. The other great person around work ethic, Elon Musk. I've got his book right up here, a great expander for you to talk about sacrifice, to talk about working hard, tough decisions. If you think when your deal may be struggling, or maybe you're having trouble getting to closing and you've got that feeling in your gut about things going wrong, you need to read Elon's book, because whatever is going wrong in your world is not much compared to what was going on in that man's world when he was running a couple companies, multi-billion-dollar companies, and on the brink of bankruptcy and really having to figure it out. It gave me that pain in my gut about problems. Other key expanders. So aside from people in books that you can read about or meet, listen to great podcasts. Have support from whoever you perceive to be one of your expanders. My wife and I listen to Will and Jada Smith on their show, and they've got such a unique perspective on life. It gives us such great appreciation and ways to improve our relationship together. So your expanders can come from anywhere. A couple more key expanders that I have, in terms of when I say an army of people to support me and back me in my corner, I've got people like Joe Fairless, who is such a great, kind, hardworking, knowledgeable, experienced real estate investor. And he is one of my key mentors and has guided me through many, many tough decisions in real estate. And so I think you have to have people like that in your corner as well. I know going into any real estate deal, I can call up Joe and say, Joe, how would you approach this? You've done it way more than I have. Help me through this decision and help guide me. And that makes me feel strong going into writing offers, submitting LOIs, knowing that I've got him in my corner, ready to come out and fight for me and make sure that I'm making a good business decision. I've got other expanders like Coach Trevor McGregor, who was on last night talking about life, business, and how to attack the mindset to be successful. I've got him on speed dial. If I need to talk about, anything in business that's challenging me, a relationship with a business partner, heck, a relationship between my wife and I, and get some guidance on what to do, how to approach the situation. A person who's had 20,000 coaching calls has got way more experience about business and relationships than I do. I need to tap into that. So find some expanders for you to tap into. Who resonates with you? Who brings you new perspective? Who's going to help drive your business? And who's in your army to support you and fight with you to make sure that you're making the best decisions? So on that note, go out and find your expanders, dead or alive, read some books, get to know some people, and I think you'll find that that's going to help expand and grow your business in 2019. The next topic was around flexibility, and this one is key. So now that you've shattered your limiting beliefs, you've got your expanders in your network, let's talk about staying flexible. So for me and my wife, when we first moved to Charleston, we said, we're just going to invest in multifamily and figure out multifamily. Here we go. Here we go. And so we got here and we were looking for multifamily deals and nothing was really meeting our criteria. And so it was hard to find the right deal. However, we were going about it totally wrong. We didn't have a goal written down. We didn't know what in the heck we were looking for. Were we looking for a 2-unit, a 4-unit, a 50-unit, a 100-unit? I just wanted multifamily. And so we didn't get anywhere. And so after like a month or two of searching, I was fed up and I said, Danny, you're going about this wrong and it's your fault that you have not found a deal. And so I said, to myself, I'm thinking through this and I said, okay, what's our goal? And so I wrote down our goal of what cash flow we wanted. I think at the time we wanted to purchase a property or properties that generated $5,000 in cash flow per month. And so once I got that goal written down on paper, I figured out I either need to look for one deal that's about $1 million or a couple of deals that are, a few $100,000 a piece. And so I had some criteria to start guiding my decision and allowing me to look in the right places to find an asset that would generate $5,000 in cash flow. And so I was flexible. I remained open. And I looked at residential deals. I looked at portfolio deals. I looked at multifamily deals, and I looked at commercial deals. And guess what? Once that goal was written down, within about 30 days, we identified a property, we had it under contract, and we closed 60 days thereafter. And it was not a multifamily. It was not part of the vision that we moved to Charleston for with multifamily. We knew we wanted real estate and we thought multifamily, but I remained flexible in that decision. And we found a great commercial property. We still own it today. It still generates great cash flow for us. And we were open to it because we remained flexible. Fast forward to about 6 months ago from our first purchase and remaining flexible, we had kind of plateaued in our business. We had only invested in Charleston County. We bought various asset types because we knew the Charleston market was where we wanted to invest because great economic indicators like population growth, job growth, high level real estate metrics that, kind of brought the market up, supply and demand specifically. And so we were buying any assets that we could get our hands on in Charleston County. And then the market kind of shifted over the last year to be a little bit higher priced. We weren't finding as many good deals in our criteria that we were looking for. And so at some point I was thinking through, well, shoot, what do we do now? Do we just hang back and relax until Charleston County prices come down or we find good deals? And I said, absolutely not. That's not the right thing to do, is sit idle. And so we remained flexible. We thought we were just going to buy everything in our backyard. Well, we were flexible to looking and expanding our market criteria. And so now we look across the entire Southeast US for, now our vision is only multifamily, 150 unit plus opportunities. And we still remain flexible in that. It doesn't have, if we find a deal that's 130 or 120 units, you better believe we're going to look at it. We're not going to not allow it to come in. We remain flexible, but it needs to meet our return criteria as well. And so back to the flexibility standpoint, we expanded our flexibility and looked outside of that one market that we initially thought we would look at. And so what I would say to you is it's important for your business, you shatter your limiting beliefs, you get your expanders, and stay flexible. Not everything is going to go according to the plan that you have either in your mind or on paper. Mike Tyson is famous for saying, everyone has a plan until they get punched in the face or something like that. And I think it's so critical in real estate because there's so many variables that can punch you in the face. You know, a lender pulls out of a deal, rates change, terms change, you know, occupancy changes, uncontrollable things to you, the weather changes, the you know, property itself could have a fire or damage or a pipe burst. You know, remain flexible and just understand that having your own belief system, having expanders, you're going to be able to get through anything. So just remain flexible and you'll be successful. To close us out here, I know we've got a few minutes left. The vision. So our vision is having a life we don't need a vacation from. And that's truly what my wife and I believe in today. We have a vision for building passive income streams through real estate. And our vision specifically within real estate, I said it before, it is multifamily properties across the Southeast region, 150 units or more, built after 1980 and before 2005, roughly. So in that year range, 1980 to 2005, and it needs to be a value add opportunity. So an opportunity that we can increase income and hopefully reduce expenses if it allows us, depending on the property type. And typically we look at C-class properties to B-class properties that we can reposition and move them up a class if it's possible. We don't look for any Section 8. We don't look for any D-class properties. That's our kind of niche and that's our area. It's what we know and it's where we can be successful. So with that, I will kind of wrap things up, Dan, and we can start to do some Q&A here with the group.
Okay, 1 second. I had to turn my light back on. I turned it off there for a few minutes. Okay, let's if you have questions about the topic today from the keynote, go ahead and type it into the Q&A box. We do have one in here already, Danny, so I'll tee this one up for you a little bit. And it's really more of a comment or a statement, but I'm sure you could probably add a few other different pieces to it. But says, very happy to hear that education and corporate job is needed. So isn't it a myth that all real estate gurus trash and say drop everything and join my mastermind to make money?
Yeah, I think that's false. I think people will come out and ask you, what do you wish you could go back and undo throughout any point in your time? And obviously we've all made mistakes and got ourselves hurt or in a tricky situation, but I've learned a great deal from that. Having a corporate job, I think you need to make sure that you get what you want out of that job. And so if you're in a job where you've got the opportunity to help with budget or help with a special project where you could oversee the budget, I think understanding finance and some of the experiences that you can gain from a corporate job can be instrumentally valuable to your success in real estate. And it certainly helps to speak to potential investors and say, hey, I've got 5 years, I've got 10 years of experience working in corporate America, managing multi-million dollar, multi-billion dollar budgets. And yes, I am going to be able to manage this rental properties budget, P&L, balance sheet, general ledger, and I'm going to make sure that it runs efficiently as possible, because guess what? I've had challenges in corporate America with inefficiencies, with inaccuracies in budgets, and I'm going to be able to do this. And they're going to say, you know what? Heck yeah, you are. You've got some experience in that. So just because you have a corporate job does not mean that you're going about things the wrong way. It just means that you have a new perspective. You've got different experience. And, I would almost think that your experience in, corporate America is a lot more valuable than someone off the street who may be just starting new and buying their first rental.
So Jose has a question in here about the different asset classes as it relates to commercial real estate, and wanted to get your thoughts on different arenas like self-storage, retail, mobile homes.
Yeah, I think all real estate asset classes present an opportunity to make money. They all have different pros and cons. And when I think about pros and cons, I think about what happens in different economic situations. So if you look at any asset class from probably 2009 to today, chances are it's appreciated in value. And that doesn't mean they're all going to react the same way in times of economic downturn, right? We've been on a growth trajectory. And so if there's ever a negative growth trajectory, how do those asset classes respond? And so for me personally, we own some office buildings in the commercial space. And I actually worry about those. If there is a downturn, are small businesses going to continue to pay for office space? Or if their income drops, are they going to try to save on their expense side and move into their house? And maybe they've got 2 employees and now they're just down to themselves. And so they probably don't need an office. And so office space in terms of an economic recession will probably get hit first, because that's a place where businesses can save money. They can cut costs. From self-storage and mobile homes, I don't think that those asset classes are hurt as much during an economic downturn. I am not an expert. I know some great people that are. Some people who have been speakers at this event know those asset classes inside and out. And so I would say reach out to them to get their perspective on it. But from a very high level, I think mobile homes, those people who live there can't move to a cheaper location unless they don't want to live inside of a covered space. And so mobile homes probably are going to stay occupied. You might not be able to push your rent growth at all, but at least you'll remain steady with your income stream. And the same goes for self-storage. Sure, people could move their stuff out of their house, out of their storage unit into their house, but chances are they don't have the space to do that. And for them, paying $100 a month to rent a unit is worth it, because they've got some sort of emotional attachment to that stuff. If they can overcome in terms of an economic downturn, their emotional attachment to that junk that's in their storage unit, then maybe they don't pay their bill and you auction their stuff off. But again, I don't think you have to worry too much about occupancy dropping significantly in those commercial spaces as much as you do office or retail, where people can be hit pretty hard on a small business perspective.
What are your thoughts on the Charleston market for commercial, and what are your thoughts on possibly doing a new build of commercial in Charleston?
The market for Charleston, I think there's great deals out there. You just need to work hard to find them. The market here is performing well. I think the outlook is going to remain strong. We have consistent job growth and population growth. So from a very high level, I think those two things are going to help steady the ship. From a new build perspective, I have looked at this in the past, and I've run into issues where the cost of construction and the impact fees associated with building are very expensive. And at the end of the day, if I sold the asset or even rented the asset, it may not produce the same kind of return that I can get from a multifamily opportunity. And so I don't really spend my time looking at that. I'm sure you can make money in doing it. I've got a really close friend who builds luxury homes in downtown Charleston above $1.5 million and does quite well. But it's just not my model. I don't know it well. I would say, find someone who does commercial development and see what they could do for you. I think it could work in Charleston. This the deals that I look at, the returns I can get from multifamily make more sense to me at this time.
How'd you go about determining the criteria, not the income requirement, but the age of the property, the asset class, et cetera?
For the multifamily deals, what we kind of backed into in terms of the age of the building, the type, is really what are we focused on? And we focus on, C and B class value add opportunities. Typically, your C and B class assets were built around 1980 to 2000. Anything built in the last 10 years is probably a Class A building. Anything built in the 1970s or earlier is probably a Class D building. That's not a always or never rule. That's just kind of the general rule. And so we really looked at the type of property that we want to have, value add, C class, B class asset, and that's the kind of year range that we get into. The other important piece about the year range is typically properties before 1980 require a little bit more due diligence around the wiring, if there's aluminum wiring at the property, and the type of plumbing that is used at the property, as well as asbestos products being more predominantly used in that 1970 year of construction. And so we just try to shy away from that. And it's not a hard and fast rule. If something's built in 78, we may look at it. We just know we need to do some extra due diligence to ensure that those components to the property check out.
Next question here is from Neil. What are some of the ways that you stress test your underwriting?
So we stress test our underwriting by looking at historical occupancy numbers for the area and specifically that property in the T12. And then we look at, what occupancy do we think we could have or could we encounter? And that's really the way we stress test it. The other way is looking at expenses and, if we run into some problem, which doesn't happen often because we are doing value add projects. We're not buying something and putting nothing into them. And so we know going in, we're going to have a large budget to fix and improve, almost everything at that property, depending on the scope of work. And so we can, understand that our expenses shouldn't change much because we've got a pretty big budget to do those repairs. But I would say stress test it against occupancy and stress test it against your financing terms. And I would just encourage having, good financing terms that you're comfortable with. If you have, 10-year fixed rate agency debt, you're in pretty good shape from a financing perspective. You shouldn't run into any hiccups. If you have a bridge loan, understand what the terms are, understand what that lender is and is not contractually obligated to do at the end of that term. So a lot of bridge lenders will be out there selling their product as a 3-year interest only with two 1-year options. And so theoretically you've got this 5-year note. Well, at the end of the 5 years, and I've heard this sales pitch before from many lenders, is that you can just buy another year if you need it. Well, is that in your contract or is that not? Because that would be another important thing to stress test is in 5 years, if the market has shifted and cap rates have increased, let's just say you bought at a 5.5 cap and now the market is trading around a 7 cap, you probably cannot exit that property. And so you need to be in a position where you can extend your financing if you need it. So stress test on occupancy, stress test on debt, and stress test against unforeseen expenses.
Scott Stamps here made a comment about the vacancy rate in Charleston being pretty high. He said like 10%. I'm not sure what asset class or what he's referring to there. Are you familiar with the high vacancy there due to the large number of units coming on? Like 3,000 plus?
Yeah, I'm not as close to the Charleston multifamily market. We've looked at a few deals here, but the numbers are not making sense for the criteria that we look at. Not saying that there's no good deals, but we found in other markets that there's better opportunities for us to achieve the returns that we're looking for. And so I know there's a ton of inventory, to take something out of the Grant Cardone playbook. There are cranes in the sky in Charleston County, and whenever he sees cranes, he runs and hides. So there's a ton of building and development. There's a ton of new units coming on in Charleston, and so I could believe that there's going to be some vacancy for older vintage product because there's new units coming available.
Yeah. Next question here is, how do you and your wife split roles and responsibilities in your real estate business?
So I will give a high-level response. I've done a couple of YouTube videos on roles and responsibilities and the key to it. What we do in our business and our life, I'll get a little personal here, we just define what skill set you're good at. And so for me in the business and in life, I am the numbers guy. I oversee our money and our budget, and she knows that's my lane, and she'll come to me if there's a question about it. She's certainly educated on it and knows what's going on with it, but she knows that I'm going to handle that and pay the bills and make sure the money's there and all of that. And so her swim lane is a lot of the design aspects. So if there's any decision that we're making either on the interior fixtures for one of our apartments that we're turning, she's going to be the one to say, which fixture do we use? I don't have a vote in that because I'm not skilled in that space. I'm going to say,
not your lane,
not my lane. So I'm not even going to go there. Another on a personal side, it's important to us to have date night so we can do it. And it's my wife's lane to make the dinner reservations. And so she'll handle that and just say, hey, we're going out to dinner, tonight. And, where do you want to go? Or I've made a reservation here, and we just go and do that. And so I think you have to have a conversation with your partner and see what they're good at, what excites them. My wife would tear her hair out if she had to look at a spreadsheet of numbers on a balance sheet for us. And so it's just not her lane. It's my thing. I like it. She doesn't. It makes sense.
Yep. All right. Next question is in regards to what are the sources of information regarding the asset classes and markets? Where are your sources of information regarding the asset classes and markets?
There are, of course, just like the general Google search as far as government census information, county website information as well about
census
jobs.
Website's really good too.
Yeah, about jobs, population growth. I've called local municipalities or police departments before and just said, hey, what's going on? Is this street a nice one or not? I've called local real estate agents, whether they're residential or multifamily. I'll just call and get the feel of what's going on there. And so I would say use all the public information. Census is a great start. Google what you want to know. So if you're looking in Albany, New York population, Albany, New York job growth, and you're going to get a ton of data. And for us specifically, we think of our brokers as partners. So, they're not the, they're not the people on the settlement statement that get a bunch of money for doing nothing. We really make them work for it and utilize them. And so I'm constantly asking them for data from either CoStar or Axiomatrix or, any other system that they pay big money to be a part of to use to our advantage. So brokers will send you a bunch of data, more than you can probably understand or read through in a given day, but utilize them. Marcus and Millichap has a great report. I think that's all public information on their website. They do regional specific and even city specific report outs of what's going on in the market. And, these people live and breathe real estate day and night. And so their opinion and their experience is valuable, and you could use that as well.
And yesterday we had John Kasman on speaking in the afternoon around multifamily markets and how to find your market and researching markets and submarkets. And on the forum, he actually posted all the reports that he actually talked about. So a lot of the multifamily, larger reports are on there. So you can use that as a resource as well. What software do you use, Danny, for your underwriting and tracking of properties?
Microsoft Excel.
And what about, I think you could probably expound a little bit on the tracking of properties that we use with Airtable, because I think Airtable has been a resource that we've started to use recently that I think has really been a game changer for us.
Yeah, absolutely. So from an underwriting perspective, it is purely Excel based. And then from a property kind of tracking of what's going on with each deal, we use Airtable, as Dan said. And Airtable is great because it's kind of like Google Sheets or Google Docs in a little bit more organized form and fashion. And so we can all be in Airtable together, making comments, seeing what each other are doing. It's also a great way to store, offering memorandums, store investor PPMs. You can put tables together, attach documents in there, and stay organized. And so all I need to do is open up, deal number 1 that we're looking at this week, and all of my information is there to read. And I can go through it on my time. I can make notes that says, hey guys, I looked at the underwriting. Tell me what you think about our returns. And then Dan can jump in and Brandon can jump in and edit directly CapEx information or investor information. And it keeps us really organized. So I'd say check out Airtable as well from the management side. And thank you for reminding me to do that, Dan.
Yeah. And during the break, if you guys are interested, put in the chat box, yes, if you're interested, and I'll share you our screen and I'll kind of give you a behind the scenes look at that. So you can kind of see what's going on and how we actually use Airtable. I don't think I can't open up all of the stuff in our Airtable just because there's some proprietary or confidential information in there, but I'll give you guys a sneak peek behind the scenes of our Airtable so you can kind of see how we have things laid out and how we're using it and stuff like that. So I'll be glad to do that for all of those that are saying yes. So just make sure you stay during the break and I will open that up for you guys so you can see that. Considering, this is another question for you, Danny, from Devin Martin, considering economies of scale are greater with 100 units or more, what number of units do you think a newbie should start with?
I think you should start with whatever you're comfortable with. And that's not the greatest answer. Like I said, when I started, I bought the first investment property that we purchased was a $1 million commercial building. We took $200,000 that we had saved up, worked tremendously hard for, and used that as our down payment. And so if you're not in a position to do that, I think you need to get started with whatever you can afford from a financial perspective and afford from your own risk tolerance perspective. If you've got a ton of experience with real estate and you've got, corporate experience managing numbers and understanding finance, there's no reason that you couldn't go out and buy a 100-unit property with a few of your closest confidants in your network or your friends and family as investors. But before you take any investor dollar, you need to be able to walk the walk.
I agree with that. It's like a big thing as far as the number of units, like that's like what you said, is really trying to figure out what you're comfortable with. And even though we say stepping outside your comfort zone, even if you don't feel comfortable taking down 100 unit or more, I think one of the best things you could do is go help capital raise for somebody in that space, get some more experience and exposure and joining other GPs and really trying to figure out where you actually fit. And that way you can start to build out your team so you can make your true first deal an effective one. Because if you do your first deal and it doesn't go real well, chances are it's going to be very hard to, get those investors to want to bring it into another deal. Not that it's impossible, because I know people who have had some deals that have not gone so well, and they've learned a lot through that. And because of the way they handled the deal that didn't go so well, people have now started to continue to invest with them. But I think you definitely have to be comfortable with whatever area you're going on. Danny, another question coming in here is, what year did you buy your first commercial property and then your first multifamily property?
2016 first commercial property, and then 2017 first multifamily.
Great. Well, I have no other questions that have come in through here, Danny. I want to thank you for taking some time this morning in the beautiful city of Charleston, South Carolina, broadcasting live with us about your different experiences, and wish you a very good Saturday. I know you're going to be tuning in to the rest of the sessions, and really looking forward to the rest of the sessions today. So thank you so much, Danny, for participating.
Thank you, Dan, for having me on, and I look forward to the sessions this afternoon.
All right, so let's